Ltd, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Meet Vora from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Thank you for joining us on GHCL's Q1FY25 results conference call. I would like to welcome the management and thank them for giving us this opportunity to host them. We have with us today Mr. R.S. Jalan, Managing Director, and Mr. Raman Chopra, CFO and Executive Director of Finance. Before we begin this call, I would like to point out that some statements made in this call may be forward-looking, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I shall now hand over the call to the management for their opening remarks. Thank you, and over to you, sir.
Thank you very much. Good afternoon, everyone, and welcome to GHCL earnings conference call for the first quarter of FY 2025. Kindly note that our results and investor presentation has been uploaded on the stock exchange. I joined by Raman Chopra, ED and CFO, and Manu Jain from Finance and IR. We believe we have delivered an operationally strong performance where volumes continue to grow and we continue to increasingly have better cost efficiency. As you are aware, that soda ash and various other chemicals have seen moderation in pricing given the global dynamics at play. But within that, we remain encouraged with our performance. Going forward, as an industry, scenario stabilization and pricing revert to the normal range, we believe our strong operational performance will be supplemented by strong financial performance. While in the short to medium term, the current operating environment may continue, we remain encouraged with the volume outlook, cost outlook, and the growth initiatives that we have planned. In a mid to long term, we are developing a greenfield soda ash plant with a 500,000 metric ton capacity. We continue to work towards increasing manufacturing initiatives lined up. To reiterate, we will benefit from completed sodium bicarbonate capacity expansion and ongoing salt yield improvement in the present year, whereas over the next year, we shall be seeing the contribution from vacuum salt and bromine related projects. Beyond 2026, we are on track to commissioning the first phase of our greenfield facility, for which significant groundwork and approval are in place. In addition, we have been allotted 6,449 hectares of leased land at Jara Jumara, Kutch for salt production for a period of 30 years. This is a significant milestone for GHCL and will cater to our salt requirements and also for the bromine expansion. I would like to spend a few moments to cover my thoughts on the prevailing industry situation. The global demand scenario for soda ash remains mixed. While in certain pockets demand has stayed strong, the pricing overall is moderated. In India, we continue to see YoY increase in consumption, whereas in the consumption of volume, import is declining due to supply chain disturbance. Despite the global and domestic challenges, our Q1 FY25 results demonstrate our operational excellence. Performance was better as on a sequential basis on the back of higher volume and lower input costs. I believe that the GHCL is well positioned for the future. We believe our initiative will enhance our growth metrics and lend support to the profitable performance in varying market environments. Now I will hand over to Raman, who will provide you further details on our financial performance. Following that, I will look forward to addressing any questions you may have. Thank you.
Thank you, sir. Good afternoon, everyone, and a warm welcome to our Q1 FY25 earning call. We have maintained focus on operating excellence. Given the scale of our operations, there is a constant focus on driving better utilization and more efficiency. This is visible in the profitability traction in the business. This will become clear as I share thoughts on the financial highlights. Revenue for the quarter came in at 849 crore compared to 840 crore in Q4 of last year. Last year, first quarter was exceptionally strong, and we reported a revenue of 1,029 crore in the corresponding quarter of last year. EBITDA for the quarter stood at 235 crore and margins at 27.7%. This is an increase of nearly 4% from Q4 of last year. In the value terms, this is a jump of 17% improvement in EBITDA compared to Q4 of last year. This increasing trend is visible from the last 2 quarters, and this is mainly due to higher volume and reduced cost impact. We believe that this trend will sustain in the current year. PAT before exceptional items stood at 151 crore compared to 125 crore in Q4 of FY24 and 207 crore of Q1 FY24. Our balance sheet remains robust with gross debt of 177 crore and a cash surplus of 853 crore, thus leaving us with a net cash surplus of 676 crore. For the quarter 30th June 2024, we generated rupees 209 crore of cash inflows after tax, which was utilized towards capex of 141 crore and a loan repayment of 20 crore. Capex includes expenditure on greenfield projects for acquiring government land and for vacuum salt to the tune of almost 90 crore rupees. These initiatives that we have lined up address both our long-term and short-term strategy goals. India remains a market that will sustain healthy growth of soda ash while providing us opportunities towards scaling up our ancillary products in which we are carrying out capex. We are looking at higher pace of execution in these areas, and therefore once these investments start contribution, our bottom line will show the results for these initiatives. With this, I conclude my comments, and I would now request the moderator to open the forum for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Jainam from Swan Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. So, could you please quantify in percentage terms the volume growth that we've seen this quarter?
In terms of the volume growth as compared to the same quarter last year, around 8%.
So, what was the imports for this quarter and the previous quarter, please?
Import, yeah, if you look at the Q4, it's approximately around, the gap is something around 15%, minus 15%.
So, sir, since we are already operating at our optimum utilization, in terms of incremental volume, could you please guide us for revenue growth for FY25 and 26?
See, as I said in my opening remarks, in terms of the volume growth, definitely we will have something around 5 to 6% volume growth in terms of in the chemical soda ash. Along with that, we will also have some volume growth into the sodium bicarbonate. Sodium bicarbonate volume growth in terms of the tonnage will be very significant. It will be something around 20-25%.
So, given the current oversupply in the global markets and subdued demand, so where do we see the prices moving forward?
See, it's a very dynamic situation at this point of a time because you see that in the globally, so much of volatility is happening. On one side, China's growth are phenomenal in the soda ash demand side, whereas Europe and US, the demands are slowed down. So all depends on how the dynamic situation changes. And therefore, it's very difficult at this point of a time to predict in this current year However, what I believe is that India will have a significant advantage next year, primarily because of lot of this solar glass investments are getting planned into India. Now the government, as you must have noticed in the budget, earlier there was a duty exemption for the solar glass import. Now that duty has been reimposed at 10%. That will encourage the investment into the solar glass investment. So that will lead to kind of a good amount of growth next year.
So in the last quarter, you had mentioned that few facilities in China had shut down. So if you could just give the current status of their operations, and given the sharp reduction in the profitability, have we seen any rationalizations in the capacities globally?
See, there are two things I just want to. One is in the China, in spite of that, the new investment which came into the Mongolian location, Inner Mongolia, because of their demand and because of that, they have been able to manage the balance between the demand and supply. They are almost like a net importer. They have been in net importer in 2023. Even in the first quarter also, they were the net importer of soda ash. Now, how would this pan out in the going forward will largely depends on two things. One, how does the growth of this significant growth continues, and second, again this will be very important, is how their housing sector, because some kind of recovery we are seeing in the housing sector also. So if these two things happen, probably I think the journey of very relevant into the export market of soda ash should not be seen much on that.
So we had commissioned our sodium bicarbonate capacity last year. So sir, what could be the capacity utilization at peak levels, and what could be the peak revenue contribution from the same?
See, if you look at in terms of, as I said, my growth into this revenue of this year should be something around 25%. Okay, but still we will have a headroom on this. Approximately from here also we will be looking at something around 20 to 25% further growth going forward into probably that should happen in next years. And in terms of, because this is happening because of now what we have been talking the last couple of years about this flue gas treatment. Now a lot of plants have started using the sodium bicarbonate for the flue gas treatment. And because of this demand growth which you are seeing into the sodium bicarbonate. So we have a headroom for 25% this year and maybe 25% next year on this growth.
Just one last question. So sir, what is the IRR that we are expecting on our greenfield project, and what is the expected timeline of commissioning for phase 2?
See, at this point of the time, I will give you based on the long-term view which we have taken, the IRR which is coming something around 16 to 17%. Of course, it will depend on the quarter to quarter how the dynamics of the pricing happens. But we have taken a longer-term view and very, in a way, I would say a little conservative or the realistic number. Probably the 16 to 17% would be the IRR. Phase 1, as I said, the initial hiccups were there, gradually getting resolved. And we are more or less in a kind of a planning stage at this point of the time on the second phase of the first phase. We will be going for 500,000 tons, and in the second phase we will be going for another 500,000 tons. Our vision at this point of the time is by 2030 we should be having a capacity of around 1.1 million tons there. Now it all depends on how because it's a long period of time, but that's the way that GHCL is planning at this point of the time.
Okay, so that's it from my side. Thank you.
Thank you.
Thank you. Our next question is from the line of Rohit from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question, sir, and congratulations for this land allotment. So first question is just on this sodium bicarb. Currently, I mean, what percentage of our total revenue is coming from sodium bicarb, and basically, is there also pricing pressure as we are seeing in soda ash segment?
See, if you look at in terms of the percentage, I don't think it's a very significant percentage at this point of a time. We almost, I would call it as a 6 to 7% kind of a right now. Okay, and this will gradually increase. Like I said just now, 25% increase will happen this year, and next 25% should happen next year. So gradually, this sector is now opening up. Okay. And we are also looking at a possibility of how can we expand on this set. Even in the Greenfield project, we have a plan for a significant amount of growth into this segment as well. Second, we said about pricing pressure. I think prices are now more or less stabilized. Okay, on this side also. Of course, these prices are as in the soda ash, these prices are also lower than the long-term average. But if the soda ash situation improves, this situation will also improve going forward.
Okay. And secondly, on this land allotment, so as we are planning for salt and bromine expansion, so how basically and when we should be expecting the progress to basically look into shape in next 1-2 years, especially from the bromine side?
No, I think, as I said, it's a significant milestone for the GHCL history because this is a large parcel of land. Approximately around, it has converted into the acre, is something around 16,000 acres of land. And this will definitely help us in a big way in terms of our captive consumption of salt. So this is going to be a very significant milestone on that. And along with that, this will also help us to kind of expand our bromine project. As you know, that next year we are opening on our existing salt field the bromine project. So this will add to our in our basket of a significant amount of bromine capacity. Now, as we know, and we are seeing a good amount of growth because of the global situation in growth into the bromine demand going forward. This will definitely help us in a big way. In terms of the timeline, see, as announced in the stock exchange, we have got yesterday only this approval. The plans are getting ready, but yes, likely it will take 2 to 3 years of time to kind of develop, because a large portion of land you have to develop the salt field and infrastructure will be required. So it will be, and we will try to build some kind of a benchmark in this industry as well. So this will require some kind of a time on that.
Okay, fair enough. Yeah, that's it from my side, sir. As of now, I will come back in queue. Thank you.
Thank you. Next question is from the line of Riya Mehta from Equities. Please go ahead.
Hi, I'm Riya, this side from Equitas Investments. So my first question is in terms of the industry. So how has glass demand been this quarter, and could you specify in terms of specific flat, solar, and how was the industry dynamics?
See, at this point of time, Riya, the Indian demand for glass, I would say, is not a very significant growth is happening, and including the solar glass also, because a lot of import is coming from China because of this the import exemption, import duty exemption. But now from 1st of October, this duty is getting reinforced, so that will help this industry. And similarly, there are many large players are coming into the solar glass. As you know, that green hydrogen is one of the big ticket kind of investments which is happening in India, and that will require the solar glass. So a lot of new investments are coming into this. So hopefully you will find a significant amount of growth into the solar glass next year. But this year we are not seeing that big demand from the solar. Similarly, for the glass side also, things are improving now. But in this year, in the first quarter, the demand growth of Indian soda ash is around 2 to 3% only.
Okay. Demand is 2 to 3%. And in terms of imports, sorry if I missed out, what was the reduction in imports that happened this quarter?
We have said, I think, around 15% compared to the Q4 of last year.
So now how much tons of imports are happening, and do you see the oversupply situation still there?
It's very difficult, Ria, at this point of the time to predict because there are a lot of things, global dependency there. As I said, three things which are important. One, on one side, how the China works out to be. Second, the supply chain disturbance which is happening. And third is how the global demands are getting shaped up. Like I said, Europe and US and South America also on the path of recovery. If that recovery happens, then this situation will drastically change. But at this point of time, if we talk to me today, the way we look at that, the surge in the imports is not likely to happen at least for next 2-3 months. To that extent, I can tell you.
Okay. And in terms of total amount, could you help me? What would be the total quantity imported by India?
Import you're talking about?
Yes.
I give you the number. Broadly, the numbers are around 15% drop into the import, and in the similar range of the imports is likely to happen.
Okay. And in terms of realization, have we seen any realization growth this quarter on a QOQ basis?
Not really. Of course, there's some positive indications are there. But because of, I would say that this quarter is almost, as compared to the last quarter, is almost like this.
Q1 is similar to Q4.
Yes.
And going forward also you anticipate more or less this range to consolidate at these levels?
Yeah, I think as I said, it's a very global dynamic situation. It's very difficult to kind of predict.
Yes.
Yes, like I said, we believe that it's more like a bottom-out situation. So.
Right. Got it. And in terms of Europe and US, you mentioned that the demand has slowed. So what kind of growth percentage are we seeing there?
See, right now the demands are on a negative zone, but now how the things shape up and when it shape up, it has to be washed out. See, Ria, I would like to focus more on only one thing. Our focus is on the three things. One is how do I become more cost competitive? How do I make my efficiencies, our productivity, our cost measures are there. In spite of such a difficult market situation, we've seen our results in the first quarter. Because other things are all depends on which are not, we don't have much of the control. The second is how do we grow from here? And that's why I said our capital allocation is more focused towards on how do we grow from here. And that's a lot of projects we have in our hands. We have a vacuum salt, which is coming next year. Then we have a bromine coming next year. Then we have now this the salt field, which we have got an allotment, where we will be having a significant cost advantage. Then other areas of the cost optimization, greenfield projects. So these are the areas where our focus is. And predicting how the things will happen into the global scale will be very difficult at this point of time, because the dynamics are changing every day.
Right. And what kind of revenue potential do you see from vacuum salt project?
Sorry, Ria?
From the vacuum salt project, what kind of revenue potential do we anticipate in FY26?
FY26, that will happen in the, I think, second quarter of next year. And after that, gradually that will happen. And we have roughly around approximately 100 crore kind of on the peak level, we will have 100 crore kind of a top line on that.
Okay. Got it. And bromine will also come Q2 FY26?
Sorry?
Bromine will also come Q2 FY25? Sorry, 26?
What is not very clear here. I'm sorry. Slightly.
The bromine will also come at similar time, that Q2 FY26?
I think that will come in the Q3 of next year.
Okay. Got it. Thank you so much. I'll get back in queue for further questions.
Thank you.
Thank you. Our next question is from the line of Rohit from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question again, sir. Just missed out on this margin side. I mean, last from Q3, Q4 was better and Q1 was better than Q4 also. So now we are at around 26% kind of EBITDA margin. So going forward for the rest of this quarter, can we expect 26 to 28% to sustain, or is still because last 2 quarters were somehow impacted by some shutdowns and the issues. So I hope no shutdowns are expected for the rest of the quarter. So this kind of 26% plus kind of margin should be sustainable.
So Rohit, I think it's very difficult at this point of time to predict what will be likely to happen because there's so much of dynamic changes in the global scale. When this supply chain, how the situation of supply chain will continue, whether it will continue or not continue, we don't know right now. Okay, but I would say that at least we believe that the prices are kind of a bottom out. This is what our belief is. But again, very difficult at this point of time. Costs are almost like kind of a flattish situation. Yes, in a way you can say that situation should be better than this kind of a situation.
So I'm just assuming that since in terms of volume we are pretty much sustaining and realization we don't see any further correction. So ideally I think margins should sustain as coal prices are also not that much on the higher side. So this sort of margin should sustain. That is what broadly I was expecting.
I think that we have already concluded it.
Yeah. Okay. And next thing, just on the volume side, I mean, for FY25, you have guided for this 5 to 6% kind of volume growth. So for 26, since no addition in capacity is there, so in 26 also we would be low single digit kind of number, or can expect around 8-10% kind of volume growth?
Rohit, I've already said that a couple of things will happen. It's very difficult to talk about a number. Sodium bicarbonate growth will happen next year. You will see that bromine will be coming into the line. You'll see that the vacuum salt will be coming into line. And those things will happen, okay? And how much that percentage will be, that has to be kind of a seen.
No, but in soda ash, especially only on soda ash, I mean, volume of soda ash should be a bit higher from FY25, or it will remain in that kind of range only?
My understanding is should be the same flattish kind of a situation. I don't think it will, because we are on almost full capacity utilization.
Yeah.
It should be on a full capacity utilization.
Okay. That is from my side. Thank you.
24-25 growth will be there. I told you in the 24-25 growth will be there, which I have already said to you. In terms of 25-26, I think the growth will be coming from sodium bicarbonate. The growth will be coming from vacuum salt. Growth will be coming from your bromine.
Okay. That's it from my side. Thank you.
Thank you. Our next question is from the line of Vignesh Iyer from Sequentis Investment. Please go ahead.
Thank you, sir, for the opportunity. Sir, regarding the salt projects, so I remember back, if I'm not wrong, Q2 FY23 or Q3 FY23, you had guided of around 100 crore that will be spending on salt projects. So, I mean, now we have been allotted a very large land parcel. So, what has changed from then to now when it comes to this specific, project? And what would be the total spend that we will be doing for this project?
Two things, Vignesh. One, the project which you are talking about, 100 crores, that's on the existing salt pit we were, and we are getting the advantage of that. The cost competitive advantage is coming because of that. Last year, so we got some advantage, and this year also will be getting that advantage. The productivity enhancement on those projects, on the existing salt pit. So that was the one. So that's a difference. And that is we are going completely as per the schedule, and we are getting the benefit also. This project is in addition to that. we have got this land, which, as I said in my earlier answer, that we will require 2 to 3 years of time to kind of develop this. And once that happens, today we are buying a lot of stalls, and the new greenfield project also, we did not have a kind of a captive facility to supplement that project from the salt requirement. So this land will help us to kind of mitigate those two things, or make us more cost competitive. In addition to that, on this project, on this land, we will have a significant amount of growth opportunity on our bromine project. In terms of the cost and in terms of, it will require some time business to kind of work out how much cost will, because like I said, yesterday only we got the final approval on that. Now the team will be working on that and we will be implementing it.
Right. So, what is our captive percentage as of for salt as of now? It is around 40-45% for our existing projects.
Yes, in a way I would say that approximately based on the current number, it should be something around 35%, roughly 35% to around 37% broadly, which we have a plan to increase to around 40-45%, like I said, on the expansion or the productivity improvements that is underway. And but this, once this happens, this project happens, probably we will have a very significant amount of again, this will be very difficult at this point of account to what percentage, but yes, definitely there will be a significant amount of capacity will increase.
Right. Also, sir, to your earlier comment to one of the analysts asking, you said around 100 crores of top line probably is expected starting from Q2 of FY26. So this is like external sales additional to what some amount that would come to captive, right?
Yeah, this project is completely different because that's what we were talking about, your vacuum salt or the bromine or this captive expansion or the productivity enhancement, which is salt fill. These are completely different projects, and this project is a completely different project. So definitely this project, which is yesterday we have announced, will add to our cost competitiveness and also to our bromine footprint, and that will have a significant amount of value creation. So that is specialty chemical we will be moving towards.
Right. So that is basically, So basically there is an exclusively towards vacuum salt and bromine, and I mean not related to the current structure, right?
Yes.
All right. Got it. Right. Okay, sir. I'll get back in the queue. Thank you and all the best.
Thank you.
Our next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, नमस्कार जलन जी, रमन साहब एंड सभी टीम के सदस्यों एंड congratulations sir, firstly on a very improved set of numbers, steady set of numbers, and we are back on the track, it seems. Hope for the continuity. Sir, firstly on this salt allotment, the land which we have got, sir, this will attribute as explained by you firstly to our bromine project, and also will be our backward integration for the greenfield for which the final node is pending. Is that understanding correct?
Yes, Saketji, I would say that this new salt field which we have got will also to a great extent will support to the existing soda ash plant as well. It will support the existing plant as well as it will support the greenfield project, and it should also we will have a kind of a bromine opportunity there.
Okay, sir. And sir, how much or what percentage integration will it add up to, or what is our plan chalked out with this land being allotted? What are we eyeing in terms of the salt as the raw material being integrated with these two facilities?
Saketji, it will be too early to speak about that. Like I just said, that the land has been allotted only after long time. So we are working out this, and it will all depend on, first we have to see that how the development takes place, and it will, like I said, it will take 2 to 3 years of time. So it is too early to speak about the percentage and then the capital cost and all this. It will be too early. So yes, like I said, it will have a significant amount of cost competitive advantage for us, and it will have a significant amount of growth opportunity on its bromine, which is kind of a shift. So our journey towards a specific chemical is we are moving towards. First, we have started this bromine project in the existing location, and now that we are increasing our footprint into that line, and gradually we will build that portfolio of bromine footprint.
Just to dwell more, 2 points. Firstly, sir, is this the precursor to the green, the note which is pending from the Environment Ministry? It's the first allotment, and now we will be expecting the note going ahead. And secondly, the bromine portfolio, which you have articulated earlier, had a very small proportion. So with this this land allotment for salt, are we contemplating a bigger size in the bromine project?
That's what I said, Saket. I said that this bromine project on this new location will definitely have a significant amount of footprint into the bromine portfolio. The scale will be much larger than what currently we are talking about. Okay. And the second, as you said, environmental clearances. Environmental clearances in terms of the bromine project, yes, environmental clearances will require, not for the salt production, but as per my understanding. But bromine project, definitely the environmental clearances at both the locations are required. And hopefully we will get it, because that's a chemical which you are extracting out of the sea water, and that helps to kind of grow your footprint into to the green initiatives, because this bromines are required in many chemicals. So that is required. So I don't think any major issues should be there in getting the environmental clearance.
No, sir. My question was the environmental clearance for the greenfield soda ash project that is pending till now. Is this the precursor move? Now with salt land allotment, the next step would be the final go for the soda ash plant, 0.5 million tons, which we are emphasizing at first stage.
Yes, I think you are right. The environment clearance on the green soda ash project is still has not been received, but we are very close. I would say that we are very close to get it. And this project, like we are talking about the salt field, it's a completely different project, and this has nothing to do with that project. It's a completely different location and different salt means everything will be different, separate.
Sorry to harp upon it, but the release mentioned that it is contemplating with the greenfield project. That was my reason why I have been asking this. The release speaks on.
No, release Sakeji is talking about this will help in augmenting the salt requirement of the greenfield project.
Correct.
Suppose, hypothetically, you are saying that suppose we don't get the approval. This salt will be there. That salt will be can be used for somewhere else.
Okay. God forbid that happen, but it is. I got your point. That and sir, lastly about the you mentioned that volumes have remained similar to what Q4 and Q1 is. So our utilization are also in the higher 90 level, or are we sub 90%?
Utilizations are 90 plus. No?
Yes. Utilization levels are 90% plus.
Yes.
Okay. So what? So the bottom line has increased only because of the imports that has gone down. Because I think so last quarter we also did exported some of the material at lower prices, and for which we have also incurred some shipping costs, if I'm correct me there. So I was just trying to understand what has led to this improvement in margin, and are these factors sustainable?
It's actually two things. One, as I said, this margin expansion is primarily because of our various initiatives on the cost measures. Right. For the volume growth as compared to the Q4 of last year versus this year, it is not very significant. Even our realization per ton is also on a almost flattish kind of a situation. Okay. So all this has happened because of our various initiatives on the cost.
Right. And these are sustainable. These initiatives will only gather momentum going ahead.
These initiatives are sustainable.
Right. And last point is on...
Well, in this quarter, I want to clarify, Sakeshji. I want to clarify this July, August, September is a rainy season. Okay. Historically, in the chemical or the soda ash plant, this quarter, because of the rainy season, always the utilization is down. Your raw material consumption is also on the side. That is a historical trend, and that may get some kind of an impact on our these norms. But whatever the initiative we have taken, that initiative will have a perpetual advantage to us.
Right, sir. And sir, you have been speaking about sodium bicarbonate investment, and now we will be accruing the benefit of it. So one can take this understanding that sodium bicarbonate, where the raw material is soda ash, so we can only see our margins expanding with higher contribution from sodium bicarbonate. This understanding is
100%. You are right on this.
Okay, sir. And last point, one more point was about I spoke about the other expenses part. So that 15 crore reduction is also sustainable, because I think it was one-off item only for the March quarter.
See, all these, Sakeshji, other costs are dependent upon on various things. At this point of time, it is very difficult to kind of comment on this. But I can only assure you and all the investors, our big focus are there on the cost control. Hello?
Can you hear us?
Hello?
Hello, Saket sir.
I think
The line got dropped. Yes, sir.
Yeah.
Our next question is from the line of Riya Mehta from Equitas. Please go ahead.
Hello. Yes, my questions have been answered. Thank you.
Thank you, Riya.
Thank you. Our next question is from the line of Shubh from Ratna Capital. Please go ahead.
Hello, sir.
Hi, Shubh. Good afternoon.
Hi. Good afternoon. Thanks for taking my question. So I have broadly two sets of questions. First is on the capex. So number one, for the greenfield capacity expansion, it's a huge number, 3,500, 4,000 crores. When will this expenses or capex come? And number two, how will this be financed?
I think two things we have said in the past also. We have a very strong balance sheet. That is, right now we have almost around 1,000 crores of cash sitting on the balance sheet. We are a completely debt-free company. And you know that our cash generations or the bottom line generations every year, how the number is. We personally believe that keeping that discipline of 1:1 debt equity ratio, we will have a large resources to kind of deploy into the growth capital.
Okay, sir. And when do you plan to spend this money?
Sorry?
When do you plan?
When do you plan? It is depending on the progress on the project. All this progress which is happening, like greenfield project, just now we spoke about the environmental clearances and the thing. Similarly, like I said, in this new salt field which we have got allotted, we have to plan it, and so that will also require kind of a time frame and things like that. But whenever the other two capital projects like a vacuum salt and this is underway, we have already spent some amount of that, and significant amount will get spent during this year. And similarly, the next year also the balance amount will get spent on that.
Okay, understood, sir. And second is, sir, again on the margins front, as I understand, you mentioned the margin improvement is primarily because of some of the cost initiatives we have taken, and it's still, closer or slightly lower than your long-term average EBITDA margins. So that should imply that these margins are sustainable. Is my understanding correct?
So I think I have to clarify this. So far as our initiative on the cost competitiveness, the journey continues. We have done some good amount of progress in last year as well as in the first quarter itself, and we'll continue this journey. So that benefit will remain. How the market shape up, how the global situation happens, this all will depend. All will depend on ultimately that's an add-on to your overall margin. But like I said in the earlier comment also, the way, though in spite of that the global market is very volatile, but the way we look at this point of a time, if everything remains the same as it is today, I think this kind of a bottom line or this kind of a margin or this kind of a pricing stability should be visible.
Understood. Very clear. Thank you.
Thank you. Our next question is from the line of Ankur from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. First question on the cost-cutting initiatives which you alluded to, in the earlier remarks. So, is large part of these cost-cutting benefits already there in Q1, or there are more that you are working on going ahead?
So, Ankur, this is the one thing which will continue. The journey will continue. There are many opportunities which is coming in our line. We, as a culture, we challenge our all cost everyday basis. And like I said, last quarter also we got some advantage. Still the journey is on various cost initiatives, and this journey will continue. And I personally believe that this is a kind of an endless journey. And that's the reason we are a margin leader in this business. And this journey will continue.
Sure, sir. And just a clarification, I think you did mention earlier the percentage of captive salt that we are using currently. I missed that number. If you can repeat that one, please.
I think I said already around 35% is the number at this point of the time. We are working towards making to around 40-42% from this number because of our initiatives on the old productivity improvement into our salt field. And subsequently, when we get this land developed, is the land which has been allotted, this number should be significantly increased. How that number, how much percentage will be there at this point of time, it will be difficult.
Sure, that's fair. Second bit on the cost curve and the capacity shutdowns or maybe some scale down in production on the soda ash side globally. Any thoughts there? At the current realizations, how should one look at it? You did mention that pricing has largely bottomed out. Where does this confidence comes from? Is the cost curve kicking in, or any insights there will be helpful? Thanks.
Two things. I'm going to a very valid question. Two things. On this cost curve, or on these margins, a lot of expansion will not happen. Because as you rightly said, the margins are at this point of a time, based on the capital cost which we are going to incur for a new expansion, will definitely have a kind of a rethink on this thing. Second, again very important, and this is again our understanding, the way we look at the China, because they're globally players and they were kind of disturbing the market, which we are seeing this is getting, in spite of that such a more than 6 million tons of the new capacity coming in. They are not disturbing the market, okay, because on these prices, they also like to kind of have a reasonable return on their capital. And therefore they are balancing. The third again, and this is again our thought is, the way there's a new old technology in China which is called Hog process. Gradually, whatever we are understanding from the experts is that segment is primarily a little bit kind of having a lesser margin than the solvay process. So probably, and the fourth, which is again very important, in China there are a lot of capacity which are very old, and probably the talk is there that how do we kind of make those irrelevant for the supply chain. So these are the few initiatives which is happening should help to kind of continue. And that is the way I consider it a kind of our confidence. But short term, as you rightly said, Ankur, short term, if that kind of more dumping can happen, in any part of the world. But in the medium to long term, I don't see such kind of situation happening.
That's very helpful, Jalanji. Just one data point there. The Inner Mongolia capacity from China, what is the number right now, and any timelines if the next phase when they're getting it commissioned?
Right now, whatever we are hearing, that is not too much of data that are available from that country.
Yeah.
But whatever we are hearing at this point of time is around 6 million, approximately around 5 to 6 million is already online. And I think next 2-3 years, after 2-3 years, they will be coming for another, I think, 5 million. 2.5 million. 2.5 million, sir.
So 5 to 6 million already operational, and another 2.5 million maybe in the next 2 to 3 years.
Yeah, this is the way we are hearing. So like I said, it's very hard to kind of validate those numbers. Sure.
Fair enough. And just last question, for us specifically, what sort of capex are we looking at, over the next, let's say, 25, 26, 27, over the next 3 years? That will be helpful. Thanks.
Ankur, like I said, a couple of things will depend on how the new greenfield projects get shaped up. And of course, there are 3 things which are already under implementation. And in the greenfield project also, the large portion of the capital allocation will be more towards the end of the period. So if I can tell you broadly, my understanding is that in next 5 to 6 years, the way we are looking at it, your 1 million tons. So probably 7,000 to 8,000 crore kind of a number should be visible on the overall 6 years time. And how this will shape up in year-wise is difficult to speak about.
And 8,000 crores will include the 3,500-4,000 crore capex for the greenfield, which will be back-ended as you suggested.
It will be complete, like 1 million ton of the plant in in the new location, and plus along with that what I said, the bromine and your new greenfield, new salt field which we have been allotted, and everything put together kind of.
Sure. Great. Thank you, Jalanji. That's very helpful. All the best. Thanks. Bye.
Thank you. Our next question is from the line of Nirav from Anvil Research. Please go ahead.
Yeah, good afternoon, sir. So I have one question. So basically, when we speak that we have achieved some sort of cost benefits in Q1 and some more to follow, was it more towards the improvement in the yields for our soda ash production, like predominantly for the limestone and the salt, what we consume for soda ash? Or was it more because of the mix of power which we have used this quarter? And one of the statements what you have mentioned in our investor presentation is that we have innovated to briquette coal instead of the petcoke which we were earlier using on, and some mix of renewable power also coming into our kitty. So if you can just help us understand this, and how much of the cost benefit is still left to be accrued based on the kind of initiatives what we have taken. Thank you.
2 things, let me clarify this, and I have been saying this. It is very difficult to kind of segregate the segment-wise benefits. There are many initiatives and everything is interlinked with each other. Now, like I said, one is like salt yield improvement. That's a cost competitive advantage. Talk about power consumption per ton of soda ash, steam consumption per ton of soda ash, or the uses of the per ton of raw materials like your salt, limestone, mix of the, as you like it, a mix of the energy is required. Now, again, like you said, how do we convert our waste, like you said, anthracite, briquette, which we earlier will not been, briquette we were making for long years. But so all these kind of innovation, cost challenges, all these mix are leading you towards the kind of a cost advantage. We cannot segregate these few things, all these things. The second, like I said in the earlier answer, this is a journey. This journey continues. We continue to challenge our costs. We continue to focus on every cost which we are incurring, be it a fixed cost, be it a variable cost, and we continue to do that, and that will definitely bring sometimes little lesser advantage, sometimes more advantage. Sometimes we get a breakthrough, like you said, rightly said, anthracite. emphasized we got a breakthrough advantage. We got that advantage. But this journey will continue, and that will lead us to kind of a more cost competitive or more margin leader into this industry going forward also.
Correct. And just a small clarification, sir. Based on our current capacity of soda ash, our requirement of power will be close to 45-50 megawatt.
Yeah, I think so. Yes.
Current is around 41 megawatts. For the new it will be around 18 to 20.
No, he's not talking. Current is around 41 kind of a megawatt.
And entirely is through the captive source.
Yeah, everything is captive.
Got it. Thank you so much and wish you all the best.
Thank you.
Thank you. Our next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you and good afternoon. So if you're looking at global capacities now, US capacity utilization is in that 82% range, and that seems to be a challenge. And if you look at the plans announced by CSCM, they are talking about adding another 4 million tons in the next 3-4 years. So you're talking about 85. So in terms of growth and demand, this is the only way you can see capacity utilization go up to levels where margin can improve. What is the kind of realistic percentage growth you can expect, say, in the next 3 years? And what is the kind of capacity utilization you will see for the industry globally in the next 3 years?
So, Mr. Ramesh, you very rightly said, in terms of the overall, we look at the new capacity which we have said in the past also, the new capacities are getting announced into the US. But look at the demand growth. At this, in the kind of a pessimistic situation also, there are 2 to 2.5 million tons of the demand every year growth is happening. Number one. Number two, solar investment, and I'm talking more on the domestic side and even the global side also. The way the green energy initiatives are happening globally, and more particularly in India, and so this will lead to kind of my belief is this growth of the 2.5 million should also expanded. The same way lithium carbonate batteries also, the way we look at that also will grow. So even if this 5 to 7 million getting added and this lesser utilization, we personally believe this will balance out. China, which is a very significant part of the whole global demand supply situation, they are in a range bound of that they are not disturbing the global market on this. Last but not the least, which is again very, very important, is reliability and the cost loss of the cost of supply chain. See, India, one of the biggest challenge at this point of time, Mr. Ramesh, is we are not fully, we don't have a full capacity to kind of meet the demand of the Indian consumers. And the way the Indian demands are likely to grow up because of this green hydrogen, so these kind of a growth will be required into the Indian space as well. And that's the reason we are going on our plan of this 1.1 million tons.
So in terms of the Indian realizations and margins, do you see any strength coming back, say, by the second half of this year, assuming that you have not taken any price increase in the last few months? And what is the outlook you see for the Indian demand supply, say, for FY26? And can you see some improvement in the overall realizations and margins next year?
Mr. Ramesh, if you talk about the demand growth, I am very positive on that. And I'm talking about next year, I said in my earlier answer also, because of a lot of new buzz is coming on the solar investments and the kind of inquiry we are getting from the solar glass investments. So we are confident that the next year things will be in terms of, and at least we can talk about 5 to 6% demand recovery, or maybe more than that recovery will happen next year. In terms of the pricing, Mr. Ramesh, like I said, it all depends on how the global situation happens and how the new capacity coming in. Very difficult to tell. But like I said in my earlier answer again, is that we, as per our understanding, these are the prices which are bottom out prices. Things should be looking at from here better. About how much better, we don't know.
Yeah, that's very useful. Just one last thought, if I can squeeze in. It does talk about the auto sector seeing some slowdown. So do you think that will kind of be an overhang for the growth in demand from the auto glass segment?
Mr. Ramesh, I personally believe no, because somewhere the demand slowdown is there, somewhere the demand growth is there. So these kind of things, change will happen. But overall, you see in the real estate, the demand growth in India is good. So these kind of a segmental ups and downs will happen. But medium to long term, I don't see any concern on this.
Thank you, Mr. Jalan. Wish you all the best. Thank you.
Thank you.
Thank you. Our next question is on the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Thank you once again, sir. I got cut out. Sir, if we take firstly the demand destruction, that is the permanent demand destruction that has happened in the European geography, and I think so there then the gap of 1 million ton where it was alluded to has been there. That is the spare capacity, and that is where Turkey and other geographies which have expanded are pushing their material into the Asian countries. So what is the scenario likelihood from Europe demand fallout, and how will this imbalance get neutralized going ahead? What's the thought process?
See, Saketji, as I've been saying, that again, this all depends on how and very difficult to kind of predict. Okay. However, currently at this point of a time, I would say that, as you rightly said, for Turkey, the natural market is the Europe. Two things likely to happen, as per my understanding, again, it's all subject to kind of how the things shape up, I don't know. One, Europe demand should gradually improve. Second, it does not improve, the pressure on the European manufacturers to kind of scale down, like you know that in the recent past, Solvay has announced one closure into the Europe. So those kind of scenarios should come because they are highly costly operations there. So these kind of restructuring should happen. And again, this is my understanding. How much is going to happen, we don't know. Okay.
Right, sir. Okay, sir, and thank you for all the elaborate answers. We hope for the green knot coming soon and we embarking on the new journey, the extended journey of higher capacities, which we have been articulating on in the drawing board for a very long time. And I wish the best to the teams going ahead. A lot of hard work has gone into the efficiency building partner, which you have stressed upon in this call also, and we can get an understanding that these are the measures that will be there for our margins to remain in this level, even if there is a volatility in the soda ash market. I hope my understanding is correct, sir.
Saketji, thank you very much. Let me kind of sum up the whole this thing.
Please.
Sum up is basically in terms of the demand, supply, or the industry dynamics will keep on changing. In the long run, we believe that this is the one business will continue to drive the performance depending upon how you manage your business. And we have been a track record of highly efficiently managing our business, and we will continue to do this journey. Now our journey is more towards the growth. Now, as you rightly said, we had built up over a period of time our strong foundation in all the fronts, which we have been able to build. And now our journey of capital allocation towards the growth is happening. A lot of new excitements are there: bromine, vacuum salt, new greenfield project, expanding the new greenfield project to the second level, new salt field, bromine expansion. A lot of things are under consideration, and these things will definitely add to kind of a value for our stakeholders. And we are trying our best, and we will always remain competitive, and we will always try to challenge our costs, challenge our performance day in, day out to remain leader in this business.
Yes, sir. Thank you for summing up the things and guiding us, or giving us an idea of how the trajectory for our company looks going ahead. And all the best, sir. Namaskar, sir, and धन्यवाद sir सभी प्रश्नों का उत्तर देने।
Thank you. Thank you.
Thank you. On behalf of MK Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Sir,